This is the Daily Market Comment by Harlambos Bisuros. I'm Maria Pachurdes. Thanks for joining us at XM.com. The US dollar rebounded versus all but two of its major counterparts on Wednesday, losing ground against the Japanese yen and the New Zealand dollar, which continued to benefit from the RBNZ decision. The fact that the dollar found some footing but continued underperforming against the yen suggests it may have gotten its dusty safe haven suit out of the closet due to intensifying recession fears. Indeed, coming on the heels of the discouraging ISM manufacturing PMI on Monday and the slump in job openings on Tuesday, it was the ISM non-manufacturing survey's turn to disappoint. Considering that the services sector accounts for nearly 80% of US GDP, yesterday's data may have added to concerns about the health of the US economy, urging market participants to lower even more their implied Fed rate path. Meanwhile, signs that the labor market is cooling were enhanced by the ADP employment report, which showed that the private sector gained fewer jobs than anticipated in March and much less than it did in February. The initial jobless claims for last week, due out today, could constitute another important piece in the labor market puzzle. Despite the US dollar gaining ground, Treasury yields drifted lower, confirming that the dollar's inflows may have been the result of a flight to safety market reaction. The fact that gold stayed supported yesterday and slid only slightly today adds extra credence to this notion. Having said all that, though, with Treasury yields continuing to slide on expectations of a Fed pivot as soon as this summer, it's hard to envision the US dollar gaining for much longer. As long as it continues to lose its yielding appeal, investors may preserve preference for other safe havens like gold and the yen. Among the two, gold may be the best choice, as with inflation in Japan cooling, investors are likely pushing back their bets on when the Bank of Japan will decide to remove further monetary accommodation. On Wall Street, the Dow Jones eked out some gains, but both the Nasdaq and the S&P 500 extended their slide. Nonetheless, with the technical picture remaining relatively resilient, it may be too early to start assuming that the market is completely switching the narrative from bad news is good news to bad news is actually bad. This was today's Daily Market Comment. Thanks for joining us at XM.com.